Hello, everyone, and welcome to the Buck Stops here. I am Catherine Murray. Well, we often talk about the public equity markets, also private equity and venture capital. I think it's also important to take a look at disruptive technologies because that is absolutely happening. And Canada is somewhat of an innovator in this space. We, of course, can take a look at Shopify and so many other tech companies that have grown up in our country. So one that came across my desk, which is new, it's a new concept. And it's in the real estate sector. So somewhat of a disruption within the real estate sector and an opportunity perhaps within investing in real estate, but through a different format versus a REIT. Joining us now to describe a little bit more about what all of that means is Logan Yergens. He is the co-founder and CEO of Willow. Logan, welcome to the program and thanks so much for being with us.
Thank you so much for having me. It's a pleasure to be here, Catherine.
Thank you. Now, certainly my brief description doesn't tell anybody exactly what your company is about, but talk to us exactly what Willow is setting out to do within being able to invest in real estate.
Yeah, so really what we're trying to do is break down the capital and informational barriers to real estate. You know, I think right now with REITs, you can buy a pool of properties. They're pegged against a floating number of shares. You don't know which properties you're investing in. And it's a pretty complicated process. What we're trying to do is allow everybody to create a custom portfolio of properties that either you drive by on your way home from work, or it's a diversified portfolio across the country. We take each property, we invest in commercial assets. So apartment buildings, office, retail, industrial. Really want to have properties all across the country in every property type. We put a 50% mortgage on those properties and we take the equity and we split that up into 100,000 units of ownership. That amount is fixed. Our clients can buy as little as 100,000th of a property. As that mortgage is paid off, clients own more equity. They get regular monthly income in those properties. And then as the property value appreciates, our clients earn 100% of it.
So just to break that down a little bit further, basically, it allows the individual investor who might not have $1 million or $500,000 or $10 million to buy some of these commercial properties, the ability to almost co-invest. Is that fair to say?
Yeah, that's right. You know, as sort of a priced out millennial myself, I thought, you know, commercial real estate is ultimately the golden egg of investment vehicles. And right now, it's exclusive to either the top 1% of Canadians or pension funds. So it's how do you create that asset or gain access to that asset for regular people in a simple, intuitive, and liquid fashion is really what we're trying to do.
And I'm kind of curious, why did you go and start something like this? Is it because, as you just said, you're a millennial and you're priced out of these markets?
I don't know. Maybe I have a glutton for punishment. It's been a long, tough road to get here, but I just, really thought I'd love to use my time to make a positive change and to allow everybody to have access to great investment vehicles. You know, I think you see a natural kind of trend towards consolidation, and how do you change that? How do you allow regular people to access great investments that are not complicated and it's not reserved for the wealthy or the sophisticated investor?
And so, a lot of people do own REITs and they have worked out very well for people. So maybe describe just a little bit like what is this is a very different product. We'll get into more details, but I own REITs. I'm very happy with them. Why would somebody look at this instead?
Yeah. So, with a REIT, you're buying a pool of properties pegged against a floating number of shares. You don't know what properties you're investing in. Your returns are averaged across the pool. They're also very volatile, just being publicly traded entities. And with us, you can pick and choose which properties you're investing in. You know exactly how much you own of that property. That doesn't change. And, ultimately, we're not saying that you shouldn't invest in REITs, but I think there's good room within every portfolio to diversify, to gain access to, real property that you can see and touch, and you know exactly how much you own of it, and you see that monthly income coming from it, and the mortgage is paid off, and you earn 100% of the appreciation in value. And I think that experience, really speaks to a lot of people, and With REITs, they're a great investment vehicle, but
we'll take a quick break and pick it up right on after this break. Welcome back, everyone. It's always interesting to take a look at new disruptive areas within certain industries. And of course, we're talking about the real estate industry right now and a different type of investment vehicle. Logan, let me just ask you, what exactly do you even call this so people know? Because, I think that you're probably one of the first. I don't know that. You tell me. But, is this a name of a type of product that we're going to learn more about?
Yeah, we're sort of the pioneers, I guess, in the space, and we call it prop sharing. We take each property and we make it, we share the ownership of that property and make it accessible to everybody.
Interesting. Let's talk about some of the properties right now, and just this is a new company. I mean, you've been at it for a number of years because obviously you've got to get the regulatory environment behind you and the financing, et cetera, which I want to talk to you about that as well in terms of how difficult or easy it was in Canada to do. But talk to us, just give us an update on company fundamentals in terms of how many properties you have and where they're at. Yeah,
so right now we have 2 properties. We've got a property right on Queen Street. Pretty much every Torontonian would recognize the building. It's right at the corner of Queen and Spadina with an outdoor retailer at the ground level and 4 residential units on the 2nd and 3rd floor. We've also got a property in Ottawa in sort of an up and coming area with new transit lines coming in, but with Scotiabank on a long-term tenancy there.
And so in terms of the product rollout, what in 100,000 units are available per property? What's been the uptake? What's the interest so far?
We've had overwhelming interest. We're frankly having a hard time to keep up with it. I mean, it's a great problem to have. It's been a long, tough road to get here. So it's, very validating and, it's relieved a lot of stress, but or maybe added to it, I guess, just in a different form. But we've got, tons of clients. They're very excited about what we're doing. They're, they're emailing us constantly and can't wait for the funds to get deposited in their account. So it's a great problem to have.
And how did you come up with 100,000 units per property? That's like saying they've got 100,000 shares outstanding for a company. I think that's the right way to look at it. I don't even know how you would think that. I wouldn't know what the right number could be. Why 100,000? And that's important. I think in terms of any type of dilution effect or how those units would even get traded. Maybe that's where your platform comes into place as well. Maybe that's a good opportunity to describe how that works.
Yeah, absolutely. So, we thought 100,000 was the right number because we wanted to make ownership accessible to all. We wanted it to be roughly 2 digits. So, right now our first 2 properties, the smallest amount you can invest is $16.68 and just shy of $50 for the one on Queen Street. So, we wanted to also have a fixed number of units per property. So, exactly how much you own of each property and that amount doesn't change. We thought, we wanted to ultimately create the product that we would want to use. And we thought that, that made the most sense.
And then how often do you update the NAV, the net asset value of the properties? And because obviously that changes in unit value.
Yeah, so we're calculating every month.
Okay. And then for investors, how do you actually access this product?
Mm-hmm.
And, from what I understand, you can buy and sell your units.
You can actually. So we take each property, we do an initial distribution. We take those 100,000 units and they're all at a single price. Once those units are sold, there's a 4-month lockup. And then after that 4-month lockup, our clients can submit a request to us in a limit order only fashion. So, you're setting the minimum or the maximum you'd be willing to pay. And then we make a market for each property, allowing our clients to not be locked in, as best as we can. We do have a defined holding period for each property for 5 to 15 years. And at that point, if you do hold it for the whole term, it'll be sold and our clients are paid out pro rata.
Interesting. And what kind of yield are you looking at in terms of the income generation?
Yeah, so we're really trying to build a diversified portfolio and allow each client to create their own custom allocation. With our initial two properties, you're receiving dividend or annual distribution yields of 2%, and that will increase over time. The mortgage, like I said, is paid off, and as the property appreciates, we assume a simple inflation ratio, and we expect to have returns of 75 to 80% over the term of the investment.
Okay, we're going to leave it on that note. We'll pick it up right after the break. Welcome back. Logan, I do just want to pick it up on the return expectations. Can you say that again? I don't know if I heard you correctly in terms of capital appreciation that you're thinking of here.
Yeah, absolutely. So, with each property, when we're looking at the attractiveness of each asset, we start and scour the market, with thousands of properties, and then we look at, a variety of different criteria. And we have certain sort of thresholds that we always try to maintain. When we're looking at our initial two properties, anyways, our clients can receive distributions above 2% or about 2% to start, anyways, and that will increase over time. And then factoring in paying off the mortgage, and then when we're forecasting returns, we assume the long-term average in inflation. Real estate is an inflation hedged asset, so we think that's a pretty conservative estimate to start. And ultimately, we don't charge any performance fees. So if inflation continues as it has, those returns will be much greater. But given those sort of factors, we would assume a return on investment over the life of the asset of 75 to 80%, or roughly 6 to 7% per year. Okay.
And just to, again, for anybody who's interested, I just think it's always important to know what the fees are. So you don't charge a fee, but there is, some upfront fees, correct?
Yes, we have 3 fees, and we're sourcing properties, we're securitizing it, and we're selling it ultimately. So, there's nobody else involved that are extracting fees that our clients are not aware of. So we charge 3 fees. One is an initial one-time fee of 2.5%. We charge an annual management fee of 0.75%, and then we charge $5 per trade.
Okay. Talk to us a little bit about some of the properties that have been of interest, like just really in terms of when you source properties, what types of properties you're looking for and what you don't want to invest in as well.
Yeah. So, we don't invest in single family residential, as sort of a priced out millennial myself. I don't want to make the problem any worse. But, ultimately we look for great commercial real estate, and ultimately those are, sort of the golden egg of investment vehicles, but we want to make them available to everybody. So but beyond that, we're looking at multi-res, we're looking at industrial properties, retail, office, really, we allow our clients to either, buy a piece of a property they drive by on their way home from work, or they want to create a diversified portfolio across the country. It's really choose your own adventure. And when you think about who your target audience is it the millennial? And I'm asking that in the sense that were you sitting there and saying, look at the success that Wealthsimple has had, look at what's been going on with Reddit and Robinhood, and this was kind of a way to participate in the interest in investing from the millennial perspective? We've really had such a wide range of interest, whether it's, people who are 20 years old and just getting started in their investment, in their investments, or it's sort of boomers who are looking to, buy property maybe in a different market. If they're in Saskatchewan looking to buy property in Toronto, well, it's so much easier to do that right here on our platform, and you know exactly what you're investing in, and you don't have to be a landlord. I'd say our main demographic though has been sort of the 25 to 45-year-old working professional, but it really has been very wide ranging. And just to pick it up on the landlord front, how do you operate the property management side of the business? Yeah, so we We are ultimately the assigned property manager, although we're outsourcing property management. So we do a competitive, sort of bid process. We ultimately, try to get as best of, property management as we can, professional management firms, but, we're accountable so that our interests are aligned with, our clients and with our tenants. And, we want to be that good neighbor, and good stewards of our clients' capital. We also want to provide good returns. And as we grow, we'll be able to ultimately give, better property management and better rates, which will translate to better returns for our clients.
And in terms of the growth rate, we just got about 20 seconds in this segment, but what are you planning in terms of the number of properties purchased per year or the growth rate?
Yeah, so we'd like to get to 100 million in properties, by the end of this year. And we, right now we've got, 2 properties in Ontario, but we're, looking to expand into every province. And, we've got a long list of available opportunities for us to scale up quickly.
Okay, we'll leave it on that note. We'll take a quick break. When we come back, we'll talk about the inflation outlook. Logan, I of course want to get your thoughts on the inflation outlook, because that is going to change the dynamics, or we think it will change the dynamics in terms of pricing and maybe opportunities. But especially since you just mentioned that you want to scale to $100 million worth of property. Am I getting that right?
That's right. Yes.
Okay, those are pretty ambitious growth plans, for 1 year, aren't they?
Yeah, I mean. We believe we've got the demand already for that, just given, clients on our wait list and, now clients that are using our system. The demand has been overwhelming.
Interesting. So with that said, then you've got to also have a macro view. And we've certainly seen the equity markets, the public markets sell off on inflation fears, and that US 10-year yield hitting that 1.8 mark. Of course, it was down yesterday when the markets were rallying, but back up today. And again, everybody should know I pre-tape these, so it is Thursday, February the 3rd. But how do you think about inflation and the interest rate environment as you go out and get mortgages? And obviously, you need that in order to scale to 100 million.
Right. Yeah. So, I mean, real estate, is historically inflation pegged assets. So, as there's inflation in all aspects of our society, it translates to rents, which translates to better income for our properties. And then with the mortgages that we secure on each property, we're, buying or we're securing fixed rate mortgages, so we can, sort of safeguard against any increases in inflation rate or in interest rates. And then buying commercial real estate, you're buying on cap rates. So as interest rates go up, there's an adjustment naturally within the market, and we're no different. So there's a lot of differing factors, but I think ultimately, we can benefit, and our clients ultimately can benefit from increases in inflation.
Are you finding, though, that there's a lot of competition in terms of purchasing these assets? There's a lot of people who do want to own hard assets now more than ever. What's the bidding process like?
Yeah, I mean, it's definitely a competitive bidding process, and we have very strict, guidelines, and unfortunately, not every opportunity that we've bid on so far or make it through that line. We want to buy great assets, but not overpay for them. So, we start with thousands of properties, whether they're on market or off market deals. We also have a great network through our investors and through other advisors and people involved with our project that allow us to have access to those sort of off-market opportunities. So, in either sense, though, it's a very competitive bidding process, and we've got a great team who are, trying to negotiate as best as we can, and ultimately translating to better returns for our clients.
Okay. Logan, I should have prompted you or mentioned this to you prior, but I didn't. So I'm going to put you on the spot a little bit here. My program is called The Buck Stops Here. And what I mean by that is, when I ask clients, like, when you think about the world or whatever it is, I mean, what's your one liner on The Buck Stops Here? Perhaps for you, it has something to do with, millennials and the individual investor having access, but or maybe it's inflation, or maybe it's owning real estate. What would be your buck stops here?
I think, really the long-term trend in investing as a whole has been from delegation to self-empowerment. And when you're delegating, there's a lot of intermediaries who are extracting fees. And, when you're doing it yourself, you can get rid of that, although you typically need some type of technology or training to be able to do it yourself. So what we're ultimately doing is just, furthering that trend and allowing regular Canadians to invest themselves in commercial properties that they pick and choose, can see, can touch, and earn, the benefits of investing in those great assets. And you don't need to be in the top 1% to do it.
I love it. I love that buck stops here. Logan, thank you so much for joining us today, and best of luck. I can't wait to see how this company grows. Thanks so much for being with us.
Thank you so much for having me.
Thank you.
Now, although we're a brand new national news organization, we want to come in running.
No subject is off limits.
Any story sounds right until you hear the other side.
We cut through the noise so you get the facts and the know-how.
That aren't people yelling and screaming at one another.
On matters that impact Canadian businesses, the markets.
Some of the biggest issues and policy decisions happening today.
We bring honesty and truth to the issues we cover.
When you're uncomfortable, you're growing. And when you're growing, you're learning.